everyone. Prior to this year, 2026, it had been a while since I had recorded any tax help videos as part of my tax help video series. Currently, there are at least 35 videos in that series, but most of those videos are older videos that were recorded between 7 and 12 years ago. Even though they were recorded back then, some of the information in some of those videos is still relevant to tax matters today. Today's video is going to be about taxation of Social Security benefits on the federal level. And the reason I say federal level is because Social Security, um, even though not all states tax Social Security, there are still a few states that do still tax Social Security. And I'll talk about those states, or I'll mention those states later in this video. So for now, I'm going to give you the floor amounts that are applicable to taxation of Social Security. So for a single or head of household filer, if your taxable income plus 50% of your Social Security is less than $25,000, none of the Social Security will be taxable. However, between $25,000 and $34,000, 50% of your Social Security will be taxable. Over $34,000, 85% of the Social Security is taxable. Regarding married filing jointly, I'm going to put on my glasses and read that information for you. I need to put on my glasses because I can't really read that well or see that well without them. And so these are reading glasses. And I apologize in advance for the glare that may bounce off the lenses of the glasses, but hopefully my new glasses that I ordered will reduce the glare or minimize it or eliminate it altogether. So for now, I'm going to put on my glasses and hopefully the glare won't be too distracting. Okay, so as I mentioned, single head of household under $25,000, none of the Social Security benefits are taxable. 25,000 to 35, 25,000 to 34,000, 50% of the Social Security is taxable. Over 34,000, 85% of the Social Security is taxable. Regarding married filing jointly, if the total amount of your taxable income plus 50% of the Social Security is less than $32,000, none of the Social Security benefits are taxable. 32,000 to 44,000, 50% of the Social Security is taxable, and over 44,000, 85% of the Social Security is taxable. And this is applicable to both parties, husband, wife, if both of them are receiving Social Security. Up to 85% of the Social Security benefits can be taxable or will be taxable. And this is applicable to retirement as well as disability. Now, married filing separately, living apart, same thresholds as the single filer, which is under 25,000. None of the Social Security benefits are taxable. 25,000 to 34,000, 50% of the Social Security is taxable, and over 34,000, 85% of the Social Security is taxable. Now, regarding the states that still tax Social Security, those states are Colorado, Connecticut, Minnesota, Montana, New Mexico, Utah, and Vermont. Again, the states that still tax Social Security are Colorado, Connecticut, Minnesota, Montana, New Mexico, Utah, and Vermont. If You live in a state that I did not mention, that means that your Social Security benefits are not taxable on the state level. Now, to avoid having to owe taxes at the end of the year or when it comes time to file taxes, I recommend that you have taxes withheld um, on the federal level from your Social Security benefits. And the way to do that is you can complete a Form W-4 V. It's a W-4 V, which is a voluntary withholding request to have taxes withheld on the federal level. Social Security does not withhold tax on the state level, even if you request it. They do not do it. Now, you cannot have taxes withheld on like a flat amount. It has to be a certain percentage, which is either 7%, 10%, 12%, or 22%. Again, the percentage amounts that you can request to be held are either 7%, 10%, 12%, or 22%. So if you want to save yourself some grief when it comes time to filing taxes, and you know that you're probably going to owe, my recommendation again is to have taxes withheld on the federal level from the Social Security. And again, the form that you would use to request that withholding is the form W-4 V. Well, I hope this information has been helpful uh, for some of you, and stay tuned for my next video. Until the next time.